Hi everyone. I hope you guys are doing very well. Today I'm excited to announce the data center power security I like best, and that would be PSIX. For those familiar with my channel, I've introduced this stock a couple times, but I want to reiterate the call because they released their full year report recently and the reaction wasn't that great, but I think that's a bit misguided. So before I dive into that, as you can see, since its all-time high, P6 has dropped about 43%, and this isn't too unique given other data center related names like IESC have also dropped a very similar amount. VRT, pretty similar story. Um, Something like NBIS, seeing the same story. And lastly, NVIDIA. And I bring up these examples because, as you can see, most of these examples I brought are trading below a declining 200 moving average. Whereas in the case of P6, it's still above its rising 200 moving average. So essentially, despite a similar decline to the other ones, it trades with a much higher average daily range. So its decline, although similar, is actually much better performance. And on the upside, you should see it outperform. So I want to look at a couple numbers, and essentially, if you look at their change in revenue in 2024 versus 2023, it's very small, so you'd think that the company is not doing that well. But the key here is while the transportation and industrial side of their business is dying, their power systems is growing like a flower. So with that being said, the company is doing really great in that sense, and they're doing much better than their competitors, I'd say. So if we look at their 2024 statement, we can see a diluted earnings per share of $3.01. So as I showed you guys earlier, the stock is trading at about 26 right now. So we're getting to a PE of less than 9 on a trailing 12-month basis. As you can see from 2023, it's explosive earnings growth. And I want to challenge you guys, if you guys can find another stock trading at less than a 9 PE on a trailing 12-month basis that has this kind of explosive earnings growth, please send it over. I'd love to take a look at it. But essentially, I did some calculations, and these are pretty conservative estimates based on linear growth rate in their power systems, transportation, industrial staying flat, and their interest expense, I should say, decreasing linearly. Now, if I show you their financing agreements, you can see that they're on lower interest rates than previously, they have less debt, and they're printing more cash than ever. So I think especially the interest expense decreasing linearly is extremely conservative. Doing these calculations, I'm looking at a net income of about 107.63 million for 2025. That'd be a growth of about 55%, putting it a forward P of about 6. So with that being said, it's basically impossible to find another stock with that low of P with a good expected growth rate in the right sector. And if you guys do have other names that you think match this criteria, please send them over. But yeah, based on my calculations, I'm looking at a fair value of about $99 per share compared to 26 now. And you guys may be thinking that's absurd, and you guys would be saying that with good reasoning. And I've discounted it for going concern 15%. It's Chinese state-owned as the majority owner Weichai. 25% discount for that. The customer concentration discount of 8.5% and a liquidity discount of 7%. So after all those discounts to my initial calculation, I get 44, which is much more reasonable than the 26 now. And it's seen those prices already, so it wouldn't be too special. But essentially, going concern is an issue with them. As you can see, they have about 120 million short-term debt that's due end of August. And with that being said, they are incapable of paying that off. Now, I give it such a light going concern discount of 15%, where you typically see between 30 and 70%, simply because their majority owner Weichai has been very good at just extending their maturity date. So while they do have that going concern, it's almost fake, I'd say, just because it's not a real concern as it keeps getting rolled out. But for now, because that going concern is clear and it's there, the market definitely is pricing that in. So it's something that definitely disappears this year, whether it's just paid off eventually after another small extension or whether they refinance to normal maturities. But yeah, as I mentioned, I'm giving it a 25% discount because it's state owned. There's Weichai, which is they own the majority of the common stock for PSIX, and Weichai is a Chinese state owned company. That's just it's kind of unfortunate. It's the one thing I really don't like about Power Solutions International, but it is what it is. So I've applied a 25% discount for that, which I think is fair. Now, customer concentration is a reason for a discount. As you can see, their top 3 customers for 2024, 2 of them made 11%, one of them is slightly under 10%. So with that being said, we're looking at about 30% between 3 customers. This is actually not too bad because I do think that in 2023 it was a bit worse. Now, we got some stars here essentially because it's less than 10%, but I think this problem is actually improving, and I've applied 8.5% for that reason. But yeah, as it grows, I don't think it's going to be a huge problem. But yeah, bringing this back, as you guys can see, just with this volume, it's not super liquid as it was an over-the-counter stock pretty recently and traded on the NASDAQ just at the end of last year. So with that being said, given its lower liquidity and a little bit of a larger bid-ask spread, I would give it a liquidity discount of 7%. So yeah, that's all. Essentially, the chart doesn't look amazing, but like I mentioned, compared to other data center related stocks or AI related stocks, most of them are doing pretty terrible. They might have broke their interim low created in March. So a lot of them are trading below a 200 moving average, and oftentimes it's declining. So I think with PSIX, it looks pretty nasty just because it's so volatile. But I think if you look at things relative to the average daily range, it actually doesn't look very bad at all. And fundamentally speaking, this is just quite a bargain, I'd say. Like, you're getting a rapidly growing business in one of the hottest new sectors for the future, and you're paying a trailing 12-month PE of less than 9. On a forward basis, you might be paying around 6 or so. So with that being said, you basically can't find bargains like this very often. So that's all. But yeah, if you guys have any questions, feel free to let me know.